Block previously, Squared reported their latest earnings report, and to be honest, I'm very happy with what I'm seeing, not just for this quarter, but especially guidance. In my opinion, guidance is way more important. We've seen that with plenty of earnings reports more recently. Good report, guidance sucked, stock goes down. In this case, we're even getting a bit more information on what's going on inside the company. Costs are getting under control. Jack is way more interested in the business, streamlining the business, meaning doing way more with less, accelerating product innovation, rollouts, etc. Music to my ears, that's exactly what I've been saying for the last God knows how many block videos I've made on this channel already. So I'm very happy with that. We're going to cover this earnings report. First, of course, quick reaction here on the stock's price action. At the time of making this video, it's up close to 13%. Right now, these are the metrics, right? Give or take, of course, they will get updated tomorrow when the market opens, depending on how the stock price reacts when the market is open. But overall, for a company that is still growing at quite a nice pace, that is now expected to grow in a more profitable way as well, I think these metrics are quite reasonable. Now, before jumping into this report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. We're going to cover Mercado Libre next, so stay tuned for that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So they start off here with a letter to shareholder, a quite informative one, shall I say. So first of all, they start by saying they're now under the 12,000 people cap. They're going to operate under this cap until they feel it's holding us back, which is likely years out, and continue to look critically at the organization and priorities. They start by saying here they want Square to be a leader in engineering and design again, a team people who point to as inspiration and aspire to join. In the last shareholder letter, that was about how they're going to grow Square through their 4 priorities of a platform, local, AI, and banking. This one will be about growing Cash App. So they say here that Cash App aims to become one of the top providers of banking services to households in the United States, which earns up to $150,000 per year, a segment that represents approximately 80% of consumers and more than 50% of household income. So how are they going to achieve that? Well, 3 pillars here. Banking their base, moving up market by serving families, and 3, build the next generation social bank. Maybe a bit of a hit to SoFi? Who knows? So first up, banking our base. As of December, there were 2 million actives depositing their paycheck into Cash App each month, relative to 23 million Cash App card monthly actives, which is 41% of their monthly transacting actives. Continuing by saying here, we see a meaningful step up in value and engagement as customers choose to deposit their paychecks with us. Cash App card actives who deposit at least $2,000 of paychecks per month spent nearly 6 times more than Cash App card active who do not deposit a paycheck with Cash App. So how do we capture this opportunity? They continue here by saying, 1, it starts with earning their customers' trust, roll out and differentiated banking features, and they'll create even further differentiation by integration their commerce payment tools. So they say here, our focus in 2024 and beyond will be 1, further integrating Afterpay into Cash App, 2, continue to scale merchant discovery in Cash App, and 3, using Afterpay's distribution to continue growing Cash App Pay, and 4, leveraging Cash App to distribute Buy Now Pay Later, again, making sure that that ecosystem is robust and working seamlessly. We've talked about the ecosystem that they have, Cash App, Square, and Afterpay. It's going to be a huge growth driver. We've talked about creating a one app. We've talked about creating an ecosystem when talking about PayPal as well. PayPal and Venmo, right? They've talked about that as well with rewards, cashbacks, stuff like that, discovery, business profiles, you name it. Cash App has been doing this already with regards to Afterpay, the discovery, payments, boost, etc. But it's nice to see that this is one of the main focus for 2024. Then number 2, moving up market by serving families. So Cash App's base is largely made up of customers with a household income of less than 100K a year. And longer term, they see an opportunity to serve customers with a household income of up to $150,000 a year. Of course, that's self-explanatory. Then number 3, build the next generation social bank. Talk here about Cash App being social, etc., etc. They say here, we believe there is an opportunity to offer Square seller the ability to customize profiles in Cash App that allows for better discovery and ordering for customers, ultimately connecting them to new local businesses through our commerce offerings. Again, we've seen that with the new announcements that PayPal made. All of this does represent a change in our approach. We are focused on growing within the United States, not expanding into new markets, and we're focused on driving growth through inflows per actives more than actives. This past year, we intentionally made decisions that impacted our active growth and that we believe allows us to move faster on overall profitable growth as we make progress towards Rule of 40. Our ability to increase engagement in this way is evidenced by recent Cash App card growth. Monthly Cash App card actives grew 20% year over year in December, more than 2 times the growth rate of total monthly actives. Again, I like this messaging very, very much. The focus here, the execution is obviously going to be very, very important, but at least now the focus is quite clear. So the highlights: gross profit as a whole, just over $2 billion, that's up 22% year over year. Square gross profit increased 18% year over year, also a real acceleration here quarter over quarter. As for Cash App gross profit, an increase of 25% year over year to $1.18 billion. Operating income was a loss for this quarter. Again, as you can see, this is a roller coaster of a ride. Negative 6% margin. As for adjusted operating income, it's a positive 9% margin, $185 million. Net income was $178 million, and adjusted EBITDA with a 28% margin came in at $562 million. Then let's talk a bit about the Square ecosystem, Cash App, and the overall revenue. In the fourth quarter, they began to leverage a pay-as-you-go model, offering select prospective sellers free hardware upfront in exchange for higher processing rates. In January, they launched a Restaurant Essential Bundle, which offers software products such as Square for Restaurants, Square Online, and Payroll at a flat price. Remember what I said when I talked about Toast. I rather own Block because of their offerings for restaurants than just own Toast because they're solely focused on restaurants. Point proven. Then with regards to the banking product, they say here in the fourth quarter of 2023, 20% of Square gross profit in our international market came from banking products. As for the Cash App ecosystem, they had 23 million Cash App monthly actives, which increased 20% year over year. Cash App Pay grew significantly during the year, ending December with 3 million actives and $2.5 billion in annualized GPV. They experienced strength from their Buy Now Pay Later platform in the fourth quarter of 2023 with $8.6 billion in GMV. That's up 25% year over year. Of course, Q4 being quite a strong quarter with regards to shopping and all of that. Then overall, total revenue for the quarter was $5.77 billion, up 24% year over year. Now, if you exclude Bitcoin revenue in the fourth quarter was $3.25 billion, up 15% year over year. And unlike plenty of other quarters, this time Bitcoin gross profit was 3% of revenue, not 2%. So there is that. Now, with regards to transaction-based revenue, that was $1.6 billion, up 8% year over year, and transaction-based gross profit was $650 million, up 7% year over year. With regards to subscription and services-based revenue, that came in at $1.62 billion, up 24% year over year, and gross profit for that was $1.35 billion, up 27% year over year. An important note here is that in the fourth quarter, they began reporting the financial results for the Buy Now Pay Later platform fully within Cash App, rather than allocating 50% of revenue and gross profit to each Square and Cash App. As for the Square ecosystem revenue and gross profit, for the quarter, Square generated $1.81 billion of revenue and $828 million of gross profit, up 12% and 18% respectively. They target positive gross profit retention to measure the ability to support sellers and help them grow over time. They say that their 2022 and 2023 cohorts are pacing towards an estimated payback of approximately 6 to 7 quarters. With regards to software and integrated payments, gross profit grew 17% year over year in the fourth quarter, while gross profit from their banking products, which is primarily including Square Loans, Instant Transfer, and Square Debit Card that grew 28% year over year. Then Square generated $1.48 billion of transaction-based revenue in the fourth quarter. That's up 10% year over year. Now with regards to GPV, more specifically geographies, so Square GPV in the US market grew 7% year over year, and in the international market that grew 26% year over year on both a reported and constant currency basis. Pretty impressive. As you can see here, 13% of Square gross profit comes from markets outside the United States. Moving on to Cash App. Cash App generated $3.91 billion of revenue and $1.18 billion in gross profit, up 31% and 25% year over year respectively. Excluding Bitcoin revenue, Cash App revenue was $1.39 billion, up 20% year over year. Our Cash App ecosystem has achieved positive annual gross profit retention in aggregate and for each annual cohort, demonstrating that existing customers have remained on the platform and increased their engagement with Cash App over time. Our historical Cash App cohorts through 2021 have achieved a return on investment of 6 times or greater over 3 years, and our 2022 and 2023 Cash App cohorts are at or pacing towards an estimated payback of less than 1 year. Very, very promising. In December, Cash App had 56 million monthly transacting actives. That was up 9% year over year. As for inflows for the quarter, that was $63 billion, up 18% year over year. Cash App also generated $1.28 billion of subscription and services-based revenue during the fourth quarter. That was up 24% year over year. And here we get actually a reconstruction of Cash App's gross profit by product area. The biggest one here comes from financial services. As you can see right here, 38%, 29% instant deposit, 17% buy now, pay later. Then we've got 8% other community and 7% Bitcoin. Moving on to operating expenses. They say here that they've implemented a number of initiatives during 2023 targeted at driving operating efficiency across their business, which had a modest benefit to 2023 results, and we expect it to contribute more meaningfully to savings in 2024 and beyond. They've also explored opportunities to reduce their corporate overhead spend, which involves scaling back on real estate facilities and curbing discretionary spending in 2023. The last couple of things here before we look at outlook. So balance sheet, they entered the fourth quarter with $7.7 billion in available liquidity, with $6.9 billion in cash, cash equivalents, restricted cash, and investments in marketable debt securities. Solid balance sheet. And in October 2023, the board of directors authorized the repurchase of up to $1 billion of their Class A common stock. In 2023, they repurchased 2.5 million shares of Class A common stock for an aggregate amount of $157 million. As time goes by, this will obviously help us with tackling of dilution. So, guidance for Q1 2024, gross profit to grow around 17% year over year, adjusted EBITDA to have a margin at the midpoint of 29%, adjusted operating income margin of 12% at the midpoint. They say here, we remain focused on achieving Rule of 40 in 2026, which is gross profit plus adjusted operating margin. Our primary objective in 2024 is to deliver an improvement from the Rule of 29 we achieved in 2023 on a combined company basis. Our initial 2024 guidance calls for gross profit of at least $8.65 billion, up at least 15% year over year. For adjusted operating income, we expect at least $1.15 billion for a 13% margin. For adjusted EBITDA, we expect at least $2.63 billion for a 30% margin. This outlook does not assume any additional macroeconomic deterioration, which could impact results. The market definitely liked that because I do think it beat the estimates by quite some margin. And so if we look at the graph right now, if tomorrow we are up 13%, probably RSI is going to be very, very close to being overbought. We're also going to be back to a point where we had previous resistance at around $80 or so. Right now it sits at 76.81, but just bear in mind that around $80, there is a lot of pressure there. But overall, good quarter, very, very good guidance, good comments by management. The focus is back where it should be. Now it's time to execute. Again, I have nothing to add. I was very critical before. Even when the stock went up, was critical when the stock went up, when the stock went down, doesn't matter. I want the business and management to be focused and performing. Right now, we're getting some promises. We're already getting some glimpses of that as well. So I'm happy. I can't complain. I'll give them praise when they deserve that as well. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.